Welcome to our session on the Founder's Guide to Iterative Applications. I'm Judy, Marketing Lead for Iterative. I'll take you through a short 15 to 20-minute session today covering the basics of who we are and how to apply to Iterative before I hand over to Hsu Ken for Q&A. Iterative is a YC-style program focused on Southeast Asia. As a VC, there are 3 points about us that is important to remember. First, we invest up to 500K. And if you're accepted today, we send you the money today. We don't wait until the program starts. Number 2, the full amount is yours. We don't do program fees or clawbacks. It's your money to decide how and what you want to do with. One of our founders' favorite memories from the batch is actually remembering Hsu Ken's introduction speech during orientation when he said, "This is your money now. We can't get it back. It's up to you guys to use the resources available from us to you to make the most of it." Which brings me to the third point. We think the investment is the least valuable thing that we offer founders. During the 3 months program, you'll receive weekly growth and fundraising support from Hsu Ken, Brian, and visiting partners, all of whom have been founders before themselves. At the end of 3 months, you'll participate in a demo day where you'll pitch to a network of over 400 investors. Since we've been founded in 2020, we've invested in over 100 companies and over 200 founders. Some of them are in the chat here today as well. These companies have gone on to raise 168 million and are collectively worth over 1.2 billion. So there's 4 days left to our Monday, 20th of January midnight deadline. So June will drop a special link into the chat. If you apply via this link, we'll fast track the review of your application. So as I mentioned, a large part of our program's value comes from the mentorship from our visiting partners. Iterative only works with visiting partners who have been founders themselves, because the only advice that works is the advice that comes from someone who's been in your shoes before. The program is designed to help founders achieve 5 to 7% growth weekly. Visiting partners not only lend their expertise, but they help founders stay focused, accountable, and efficient to clear their biggest growth blockers so that founders can solve their most pressing problems. Visiting partners can change every batch, but some we've had in the past include Aaron, who is the co-founder of ISA, a Thailand-based startup that automates immigration, hiring, and compliance processes. A serial entrepreneur, Aaron's first startup was acquired by House, where he subsequently served as co-creator and lead inventor of their Moonshot Studio, which helped the company reach a 4 billion valuation during his time there. Diana was the founder and CEO of GPay, a startup that gave financial independence to domestic workers in Singapore. She is currently the Senior Strategy and Operations Manager at Revolut, leading the launch of the digital bank in her homeland, Ukraine. Jessica Chow, Director of the Clinical Innovation Center at the University of California, leads our healthcare investments. She has extensive experience guiding and mentoring startups. Founders who speak to her during the interview process have consistently told us that talking with Jessica was the thing that made them really want to be accepted into the program. Previously, she co-founded Healtho, a consumer health information company. Derry is the co-founder of Ula, which brings e-commerce to small retailers across Southeast Asia. Ula have raised 141 million from Sequoia, Lightspeed, Tiger, and more. And last but not least is Tessa Wiana, co-founder of Zendit, a $1 billion Indonesian fintech unicorn. So let's talk about the application process. Our process is pretty straightforward, which we summarize as 1 application, 2 calls, 1 yes. Please submit your application online via the link that we sent in the chat for your use. Every single application is reviewed by a human being and usually more than 1. If your application passes the first review, you move on to the next stage, which is a 30-minute call with one of our venture partners, who is someone on the team or someone who is a founder from our community who has successfully gone through the program already. In this first call, we want to learn more about your startup and get to know you as the founder. If you pass the first call, you advance to the final call, which is a 30-minute conversation with Brian or Hsu Ken. Most founders are surprised that our teams show up to both calls prepared. We would have read your application thoroughly beforehand for either call, so there's no pitch needed. You don't have to go through your deck with us. It's all very conversational. What's important to note for the final call is that Brian and Hsu Ken will ask you questions to learn more about the problem you're solving, your business, and to know about you, more about you as founder and how you think. Iterative is not consensus driven, which means only Brian or Hsu Ken needs to decide if they want to invest. This process typically takes about 2 weeks. The last thing to add about this process is that we're always looking for a reason to invest, to say yes, and not a reason to say no. That's our mindset when we go into the application process review. So who we look for? The way we assess whether we can believe in the founder and whether they are capable is by evaluating 3 different factors, as you see here on the screen. So we'll break it down one by one. The first is, do founders do what they say they're going to do consistently? Consistent execution is easy to say, really hard to do. Our program is designed around 1-week sprints, which means every week you'll meet with Hsu Ken, Brian, or our visiting partners in one-on-one office hours to discuss what your startup's biggest problems are and what are the biggest blockers are. They decide on a plan, and it's on the founder's job to execute and get the job done. The next week, you'll meet again during one-on-one office hours. From our experience, the best founders are the ones who said, last week, I told you I was going to do XYZ to get 5% more users. I did XYZ. If they reach their targets, the conversation is about figuring out why it worked and how to do more of that. If they didn't reach the target, then it's a conversation about why it didn't work. In both scenarios, the main catalyst for progress is that the founder did what they said they were going to do, regardless of the outcome. The important takeaway from this process of consistent execution is that before you commit to doing XYZ, you have to think really carefully about how you're going to do that and have a really good plan for doing it. We find that founders who are structured thinkers and good problem solvers are really good at this. The second one is, are founders convincing? This is simple but important because founders typically have to convince a lot of different people to do a lot of different things all the time. They need to convince people to work with them, buy their product, convince people like Hsu Ken or Brian to give them money. So being convincing is critical to being a founder. Lastly, we found that founders who are internally motivated, that is motivated by solving the problem they're set out to solve, learning as much as they can about their industry or how to build their startup, tend to do better and be more resilient than founders who are externally motivated by things like making money or becoming famous. We tell founders that if making millions or becoming famous is your goal, there are other easier ways than doing it with starting a startup. So now that we have founders, what kind of startups do we look for? Who are we looking to fund? Iterative's vision is to increase the GDP of Southeast Asia through entrepreneurship, which is why we have a rule that at least one founder is based in Southeast Asia, or a majority of the company's customers have to be in Southeast Asia. Our founders also need to be full-time working on the startup. To borrow a phrase from Hsu Ken, the reason why is that founders need to believe in their idea enough to quit their jobs, not believe in it only if we do. Iterative is also industry agnostic, so we're open to funding companies across all sectors. You can be B2B marketplaces, AI, fintech, we look at everything. We get asked a lot as well about the stages we fund, and we are open to both early and later stage companies. So when we say early, we've invested in companies that have just been an idea, a concept. For later stage companies, even if you're generating $1 million in revenue and have been operational for a while with a team of 20 or so, many founders find that our program still value adds their day-to-day in identifying new growth, in hiring methods, or being able to create roles and responsibilities in their growing organization. So for both companies, for companies in both stages, we look for the same 2 things. 1, is the startup solving an important problem? And 2, do the founders have the ability to solve that problem? So I talked a little bit about founders in the previous slide. Now I'm going to address what an important problem is in the next slide. A startup exists to solve a problem. So how big that problem is will dictate the market size and the product. For a startup to be successful and venture backable, it must tackle an important problem. So how to tell if a problem is important? We answer that with asking and answering 2 questions. How many people have this problem? And how painful is the problem for each person? So with these 2 questions, there's also like 2 emotions we kind of assess it with. Is the problem experienced very painful, or is it kind of annoying? So if many people are experiencing a very painful problem, we see this as a large market. If a few people experience a problem that's not painful, it's annoying. We see this as a very small market. So these are very stark differences and a little bit more obvious. The next two scenarios are a little bit more nuanced. If a few people have a very painful problem, we see this as a medium to large market, as those people are likely to seek out and pay for a solution for their painful problem. I think you can see it here. If many people have a problem that's only mildly annoying, they're less likely to care about solving this problem as it's a minor annoyance. So the greater the people, the greater the pain, the larger the market. Now, traction. As I mentioned, sometimes we invest in very early stage startups that where there may not be a product yet. So we ask for traction. And the way we think about traction is evidence of growth, regardless of what stage you're in. We want to see that the founder has identified a significant pain point and gathered evidence that their solution is directly addressing this pain point. So if you have a product, evidence is product traction. If you don't have a product, traction might look like the number of online bookings that you have, which is what our portfolio company Beauty Buddy did. They are a social-powered marketplace for wellness services such as salons. And what they did was they created a free Calendly to start accepting online booking requests, and they fed it to their bookings to the salons as usual. So this helped prove that there was a growing demand for the service and that online bookings would generate more revenue. Now, the rate of growth is actually more important to us than the actual number. For example, if you get 5 people your first week to use your product, and that number triples each week, this 3x weekly growth for an important problem is much more attractive to us than if you were, say, getting thousands of users from running one ad, but then your growth sort of plateaus and then you struggle to get new users after that week. The last thing we'll talk about in what we look for in the application is where we ask for insights. In the application process, we're trying to learn as much as we can from you. Another way to define this insight is what we look for is rare knowledge. Do you know something about your industry that very few other people know? We're looking for founders who are informed about what they're working on, and some of the best founders have spent significant time learning about their industry and their users. Internally, we have a lingo to describe this, which is insights per minute. How many new insights can Hsu Ken or Brian walk away with after a phone call with you? If it's high, that's a good sign. You are the founder of your own startup, so our team gets into these calls with you, assuming you are the expert of your startup, your problem, and your industry. If they walk away not learning anything new, that's not such a good sign. So, contrarian belief. Brian and Hsu Ken have been in this space for a really long time. They've been co-founders for about 20 years now. They believe that the next big thing is probably something that nobody has done before, or it's a different solution to a problem that people have tried to tackle before. That's what we mean by contrarian belief, and it can be a good thing, especially if you have some evidence to back you up. Now, let's talk about mistakes that you should avoid, or you should try to avoid. This may or may not be obvious, but an application that is full of industry jargon or technical terms makes it really difficult for us to understand what you're trying to do, especially if it's industry specific. So use simple terms to describe the problem, solution, or your business. And this will help those who are reviewing your application learn more about your business as quickly as they can. The next common mistake we see is problem statements that describe the solution and not the problem. So if your problem statement is something like, we are working to develop an AI-powered chatbot to handle customer service to improve response time, that's not really a problem statement. A problem statement would focus on the pain point first, backed by data. So customer service teams are overwhelmed. The average response time has increased X% over the last 72 hours because of this. Customer service scores have dropped 10% to 6%. So that's something that you should write into your problem statement. Another common problem we see is when founders aren't able to recall key metrics off the top of your head. As the expert, you should be able to recall these things. What are your weekly active users? What's your weekly growth percentage? Whatever it is, you should have it at the top of your mind. And another common problem that we see is founders trying to solve everything, everywhere, all at once, is to juggle everything in every aspect of their business. But the best founders that we see are the ones who are able to focus, to zero in on one problem, and to solve that before moving on. So I'll move on to the top 3 rejection reasons. So we reject companies, if technology does not appear to be the key differentiator, or if your company operates out of our geographical scope, so outside of Southeast Asia. But typically, we actually see these 3 as our top reasons. These are real data based on our last batch. For instance, 12% of them, so over 100 companies, had insufficient validation. The founder may have talked to some people, did some surveys, but haven't dug deep enough to validate the problem and validate if people want their solution. The second top reason during the batch was that market sizes were not big enough to be venture-backed. And the last reason is insufficient differentiation. That means we're not convinced that the proposed solution is sufficiently different from existing solutions already in the market, and we weren't convinced that they were able to capture a significant share of the market. So the last bit before we go into Q&A, we have some resources to help you in your application if you have more questions. So we'll send links to these in an email after the event. Our FAQ is a time saver. We highly encourage you to read it. We answer very common questions from founders like, how much do we invest? Do all founders need to be present at all calls? Can I apply without a co-founder? We answer all of this in the FAQ. We also have a guide to answering our application questions, which tells you exactly what we're looking for. 2 newer guides that we now have are getting into Iterative and what happens at Iterative. So getting into Iterative is a lot about what I've covered today, but deep dives further into it. It's a handy resource to refer to before and while you're doing your application to make sure you're answering our questions specifically. What happens at Iterative covers a lot more about the program, so the value we provide, the deal terms, the benefits. If you're curious about how we run office hours, our fundraising bootcamp, all of this is covered in the document. Okay, now we'll move on to the most exciting part, which is the Q&A. Please take on the QR code if you haven't already, and let me switch us over to our Slido wall. While I'm doing that, we'll pin Hsu Ken to here so you can see him.
Hey, everyone.
Hey, Hsu Ken. Let me pull up our wall to see what's the first question that we have. Here we go. We applied previously, however, do not have enough traction metrics yet due to recent soft launch, less than 30 days. Should we still apply to this batch?
So our rule for this is if you have already applied to this batch, then we only kind of take a look at the application once. The reason why we kind of limit it to 1 application per batch is just so we don't spend a lot of time kind of just like rehashing kind of applications kind of over and over. If you applied to a previous batch and didn't get in, then I would definitely recommend you apply to this batch. An interesting stat that we pulled once is it turns out the more time somebody applies, the higher their chances of actually kind of getting in is. And the person who's gotten in, I won't say who they are. The person who's gotten in with the most number of applications applied 7 times, and then I think 7th time they got it. And he's now kind of like one of my favorite founders. And so I think applying more only kind of helps you. The reason why this is the case is the more time somebody kind of applies, the more touch points that we get to like talk to them and kind of learn about them. And so we kind of get to know them like along their journey. And so in hindsight, it kind of makes sense why we would kind of more likely invest in somebody that has applied several times.
Great, thank you. Let's look at our next question.
Would it make sense to reply? Again, we don't look for within the same batch, but if you feel like you made really significant process, what I would do is I would just email me and tell me what the like really significant kind of progress is, and so you can kind of like take it that way. Here, I will put my email in the chat.
When considering market size, what dollar amount do you view as large?
Okay, so we are different than most VCs. We don't really think of kind of top down kind of market sizing, right? I'm like, okay, 10 billion is large, 1 billion is large. Like we can kind of just make up numbers, but to me, the most kind of really disruptive kind of markets don't have a market size that already kind of exists. And so, I think that there's lots of stuff that with no market size right now that I would like love to invest in. So I think it's hard to kind of give a specific number. Um, Maybe what I'll say instead is, um, we are looking for companies that we think can be worth kind of like at least 250, 500 million. And I think in US it's probably like a billion or bust, but I think in Southeast Asia we're still kind of developing a bit. So I think anything above 250, 500 million I think is reasonable for us. And obviously if it can be a bigger business than that, then I think we're quite excited.
Awesome. Just before we go to the next question, a reminder to everyone, please upvote any questions that you want Hsu Ken to answer. We've got 14 questions so far, so please upvote whichever you want him to get through.
And
So
then
this
more.
next question, there are more. Okay, add more. So the next question here is, do you give feedback to all applicants, successful or not?
Okay, so everybody gets an email if we actually that's kind of funny. If they're successful, they don't get this email, but everybody gets an email and with a reason for kind of like why we're not kind of accepting the application. And that email has kind of like a reason or rationale. Now, I get it. I've kind of been in your guys' shoe. Oftentimes that rationale is like not we can't write kind of super specific emails to kind of everybody. Again, we have kind of like 1,500 to 2,000 kind of people that apply kind of every batch. And so I think it can be challenging to kind of write that much, but you will get a kind of a reason. If you get a reason and you want more feedback, you can try your luck and kind of just respond to that email and be like, hey, I would love to kind of understand more of kind of like this thing. And oftentimes we will write back. No promises, depending on kind of how busy we kind of are and that kind of stuff. But you will get some sort of feedback. And if you want more feedback, I would just reply to that email and kind of ask for it.
Yeah, the feedback that we give is invaluable. So if you go through the process, you get the feedback, it helps you in the process no matter what.
Sorry, maybe the thing I'll kind of say is I was only talking about email, but Judy makes a good point. If you get to a call with us, you will definitely get a lot of feedback. Like I think anybody who reaches a call will definitely kind of like get feedback just based on the questions that we ask and all that stuff. I think you'll kind of have a pretty good idea of how we feel.
Awesome. What is the success rate of your company portfolios? I think I
Depends
touched a
on
little
what
bit.
depends what you define as success. I think that's kind of, and I say that kind of jokingly, but it's also kind of like true. It depends what you define as success, right? So if success to you is like I sold my company, if success to you is kind of like I raised more money, then I think there's lots of kind of different things. If your success is you found happiness in life, then maybe it's different. Um, so I think difficult to answer depending on kind of like what that is. I would also kind of say too that we invest in companies that are like super, super early. And so we've been around for about 4 years and we invest in companies that are really early. I think for the best startups, it takes about 7 years before there's kind of like a real kind of like outcome. And so I think we're pretty early in the process. Maybe a percentage that is helpful to people is we do track what percentage of our companies are able to fundraise 9 months after the batch. And I think historically that's been somewhere like 65%, 70%, I believe. So that's a near term kind of like gauge. But success rate, I think, will take quite a bit longer to figure out.
Again, I was curious, 65, is that a high percentage in the
Oh my God,
industry?
I think it's super high. I was talking to somebody that works in another accelerator who may or may not have applied for a job told me that they have one in the 2 years they've existed. Not
Oh,
1%, not like one company. So I think 65 and 70 is quite kind of like high. Yeah.
okay, let's move on to our next question. Any success stories of a solo founder at Iterative?
That got in totally. There's tons. And so, I mean, the one that comes to mind because we were friends before is there's a guy named Charles Lee who started a company called Coder School. He went through our program and then after the program raised the Series A from Monk's Hill, and he's a solo founder. But there's kind of like a number of we have quite a few kind of like solo founders that are part of Iterative. They're great. We don't have prejudice against solo founders. So yeah, there's kind of lots of stories of solo founders that get in. I think it's hard. I think it's to get into YC is quite hard as a solo founder. I don't think we have quite as strong as a prejudice.
Okay, I think the next question is related. This is a solo founder, but can you help me find a co-founder?
Yeah, we actually have an entire co-founder matching platform that people kind of use to kind of find co-founders. So we can definitely kind of help. I think one of the interesting things that's happening within the community now is we've invested in 150-ish companies over the last 4 years. So we have 300 about 300 founders in our like Slack group. Not all startups kind of make it. And so we're seeing a lot of people who started companies, went through Iterative, maybe their startup didn't work out, and then they're kind of joining other people's startups within Iterative and kind of starting new companies and that kind of stuff. And so I think what's been cool is that they're almost kind of using Iterative as kind of like a filter for both hiring and kind of finding co-founders and stuff. And so um, if you are a solo founder, you should still apply to Iterative. You can still definitely kind of get in. And then if you really kind of are looking for a co-founder, we can definitely help. We have a co-founder matching platform, and maybe you can kind of find a co-founder from one of the other kind of iterative start earlier batches. But yeah, we can help. On top of that, we know a lot of people. We can introduce you, blah, blah, like all the traditional ways. But I think there's kind of like unique ways we can do this for you.
Let's move on to our next question. We are raising capital to build a product. How can we provide sufficient validation? Do you look for actual contracts from clients?
Yeah. Okay. So this is kind of a fun validation question. So I think there are different types of validation, right? And there are different levels of kind of like how valuable they are. If you have actual money from a client, that is the most high value validation because somebody actually gave you money. If you don't have money from people, then actual contracts is kind of like helpful. If you don't have actual contracts, then I think like LOIs are kind of like the next kind of most useful. If you don't have LOIs, then at least you've kind of been able to kind of get on phone calls with people and people are willing to talk to you about it. And if you can't get on phone calls with people, then signups are probably. So you can kind of see like increasing kind of decreasing kind of like level of kind of value of kind of the evidence for validation here. So I would think about it that way. So again, if you can get money, that's kind of the best sign. How can we provide sufficient validation? Okay, so the thing I think about a lot is you don't need to build a product. Two things. One is you don't need to build a product to sell a product. I kind of talk to people about this all the time. You can sell a product before you kind of like build it and to get a sense of kind of like, is somebody going to want this? I think one of the mistakes that we made when we started companies was we thought we had to build it and then we would try to sell it. And what we ended up doing was building a lot of products that nobody cared about. So we got much more success by starting to sell products if we got a lot of traction on selling the product, then we would build the product. So that's one. Um, June, who is just plugs all of our stuff. Thank you, June, for doing that. There's a lot of videos that we have on this in Startup Academy. And so June can kind of help out with this. The second thing is I'd be very surprised if you actually need to raise money to kind of build a product. I think in this day and age, you can kind of build products very cheaply now, and especially with all the no-code tools that are out there tend to be kind of like quite cheap. You can kind of build entire platforms, like our co-founder matching kind of platform, completely built on no-code. And so I would kind of tackle it that way. So one, you can sell products before you actually kind of like build them. And I think you can actually build products quite cheaply and quite quickly nowadays. So I'd be surprised if you need to raise money for it.
That's an interesting way to think about it. Next question. What percentage of equity will you be taking?
Yep. So we invest up to $500,000, and we aim for kind of about 10%. And so there's some kind of negotiation depending on some of the companies and some of this kind of stuff, but that's our typical kind of aim. And so there are some companies that we've invested in where it's literally just an idea that people kind of like thought about, and then there are some companies where it's like they're doing like 1 million in revenue, and so we have to kind of adjust to that range. But we aim for about 10%.
Our next question, what questions are asked on these final interviews?
Oh, that's a good thing. Kevin, I saw your thing about Startup Academy, and Melissa's not here, but you just made her day. Someone please screenshot that for her. Melissa's the person on our team that works on this. Okay, what questions are we asking on the interviews? Okay, a few of the most common questions that I ask every startup on the interview. One is, what is keeping you from growing faster? And I ask this question regardless of how fast the startup is growing. So a startup could be growing like 10x every month, and I'm still like, what's keeping you from growing faster? Okay, why do I ask this question? The reason why I ask this question is I want to understand how the startup thinks, how the founder is thinking. So to me, the primary question that a founder should be constantly asking themselves is, how do I grow faster? And the reason why this is the case is if your startup is growing really fast, it kind of solves all your other problems. If you grow really fast, investors want to give you money. If you're growing really fast, people want to join your company. And if you're growing really fast, like blah, blah, blah. So, growth kind of solves all problems. Now, I think founders who are the really good founders have a very good understanding of kind of like what is keeping them from growing faster or what they need to do to kind of grow faster. And so oftentimes there's like something that they're working on that will unlock more growth to them. Founders who I think are not as good typically will think about growth as just like a thing that has happened. They don't really understand why. They don't understand why it's growing. They don't understand what constrains their growth. They're just like, I don't know, it's growing and I'm doing stuff. And if they're detached from what they're doing to kind of the actual growth, and then it's really hard for me to believe that they're going to be able to generate more growth. Some companies grow very fast because the founder is lucky. That luck never lasts. So they may grow really fast for like 9 months. And if you don't really understand why you're growing, when it turns off, because it always turns off, you're not going to be able to get it back and you're not going to be able to engineer more. And so I tend to ask this question kind of quite a lot about what is the kind of like growth blocker. And again, I ask this question regardless of how fast people are growing. I just want to understand how they think about growth. So that's one. Um, Another question that I often ask is uh, who is who is your kind of like initial target market? And what I mean by this is for in my experience, all kind of successful startups started with some very small niche kind of market, and then they won that market and they moved on. And the reason why that's the case is because when you're a founder and you're working on a startup, you don't have much resources, and it's really hard to make a really good product. And so what you end up doing is, I can only make a really good product for a small set of people, and so they focus on doing that. The mistake I feel like I see a lot of founders make is they don't have a lot of resources, and then they're trying to make a really good product for a lot of different types of people, and it's impossible. You just can't do it. There's no way to make a really good product for a lot of different people because they have lots of different needs. And so I'm looking for founders who have identified a specific niche and a small group that they're building for. They should have good rationale for why they're building for that niche and not another niche. And then the really good founders are like, I'm building for this group because they need it the most, blah, 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 all this kind of stuff. And then I'm going to move into this next group because of this. And then I'm going to move into this next group because of this. And to me, when you grow to a very large product, it's basically because you have kind of like made a bunch of these leaps. If anybody has played the game Risk, where you're like taking over one piece of territory and then the next piece of territory, that's actually what startup growth looks like. I think the thing people kind of miss all the time is by the time they hear about kind of startups and they're famous, it just looks like they are a giant country on Risk. But if you have been playing the game the entire time, they've actually been like slowly kind of like eating up into their kind of like into the next kind of like territory. And just like the game of Risk, you get more kind of like soldiers as the game kind of progresses. And so you can kind of like eat into the more territory. But if you try to expand too quickly, you're too thin and you kind of very easy for other people to take you over. But those are, I can go on this forever, but those are the two questions that I feel like we kind of ask most often, or at least I ask. And that's the reason why we ask. Maybe last thing, and we can go to the next question. Most of the time, my questions are more about trying to understand how the founder thinks about his or her problems. They're not actually about kind of the actual kind of like, I'm looking for a specific answer. And I think that sometimes maybe is kind of surprising to people. But when we're working with such early stage startups, we're kind of like betting a lot on kind of founders. And so I'm trying to get an understanding of kind of like how the founder thinks. What they kind of think, we can always debate and that kind of stuff. But I really want to understand how founders think about the problems.
Okay, let's move on to the next question. Any question you find founders get hung up on during your interviews more than they should be?
Totally. So let me just take those two questions that I just kind of said. So the first one is when I ask about growth blockers, not everybody, most founders give me a laundry list of things they are doing. That's not that structured of a kind of thing because it's not tied to what's blocking them. So if let's say somebody asked me, hey, what is the thing blocking Iterative from growing more? And if I'm like, okay, so we're doing a marketing campaign and then we're going to hire influencers and we're going to like, that's not actually answering the question. The way to answer the question is, okay, Iterative grows more by investing in more companies. In order to invest in more companies, I need three things. I need more money, I need more people to apply, and I need the quality of those companies to be high. And this is actually the case. I'll tell you guys now. The stack rank order of the problem that we have with these right now is actually money is the least is our least important problem. We have the money. We're raising another fund, so money is kind of like oddly kind of like easy for us to have. Um, and so it's a debate between quality of startups and number of startups that apply. We can have some debate on there. Okay. In order to tackle the quality of startups, we have identified kind of specific kind of industries that we're interested in, and we're starting to kind of do outreach to specific founders to get at the really kind of high quality founders in a more kind of conservative way. For the get more founders, the kind of volume game, we are working on more content and we're building startup academies so that we can kind of reach out to a larger kind of mass of people and be helpful to them at a larger scale. And startup academy is, always on and can reach kind of anybody. So what you can see what I did is somebody asked me about growth to iterative. I broke down what are the components that make iterative grow. I stack ranked what the three problems that we kind of worked on, and then I told about kind of like specific things we were working on for each of those things. And that's a much more structured approach than just like I am working with influencers. And it's like, why? Like why influence? By the way, working influencers might be the thing that iterative should do, but like you need to be able to explain why. So I think people get hung up on that a lot where they're just like, it's like they think the question is, hey, give me a bunch of ideas for how you're going to grow. And it's not that. I'm actually just like asking for like structurally, how do you think about growth? Okay. Second thing about niche markets, I think this is counterintuitive, but when I ask people about niche markets, they almost sometimes refuse to answer my question. And I think the reason why is because they think that if they tell me, I'm going to think their idea is too small. And so it's like, and that's actually not the case. I likely think your idea is kind of like quite big. I just want to know where you start. And maybe the reason why this is so important to me is most startup founders, when they talk about what their startup is going to be long term, it's kind of like pipe dreams a little bit. I mean, they need to have a vision, but you just learn so much about kind of your customers doing it. None of my friends who have started really big startups, their startup now is not what they thought when they kind of started, and that's okay. And so they figured it out along the way. And when I'm asking about the niche markets, I'm trying to figure out if they can figure it out along the way based on that kind of initial market. And I think they take it as like, Hsu Ken thinks my startup is small. And so to me, if you're answering this question, even outside of it or to anybody else, I think you want to be able to kind of explain as a kind of niche market, and then you can kind of explain kind of like how that's a starting point for you, and then you can kind of like move up from there. And so that's probably the way you want to tackle it.
Okay. Our next question, we've built our MVP and plan to launch it in private beta next week. Given our current stage and limited traction, would it still make sense for us to apply?
Totally. I mean, just try. Why not? You don't lose anything, right? I mean, look, our deadline is on Monday. So you literally apply before Monday. And if you don't get in, apply on Tuesday. Like, you don't lose anything, guys, right? So just try. And look, I think I feel like founders don't do this enough. I feel like you should, okay, two things. One, if you are not sure whether your iterative is going to be useful to you, you should still apply because you can kind of find out during all the calls and all that kind of stuff. And if you take calls with us and you're like, I don't think these guys are that smart, and then you just tell us that you're not interested at the end, just reject the offer. It's okay. I mean, you're more than welcome to do that and no hard feelings, right? So, like, if you're unsure if we're going to be helpful, you should go through the process, and then it's only two 30-minute calls. You're going to get a lot of feedback on your startup, and then at the very end, you can reject our offer. No problem, right? And then I think a lot of people want feedback from us. And again, I think the best way to kind of get feedback from us is actually going through the application process, because as part of the application process, we evaluate your startup and then we kind of tell you. So you should just apply. And if you don't get in, apply next week. And then you can kind of go to the next one. So you can just keep applying. There's no harm to this, guys. Just do it.
I feel like we get that question so often that should be our front page on our website. Yes, you should
Yeah,
just apply.
100%. And look, I think there is a part of this that is like, I think this is somewhat prevalent. This is a human behavior thing, but I think it's more prevalent in Southeast Asia. Don't self-reject yourself, guys. Like, just apply. Like, you should believe that you kind of belong and you should kind of make it. Like, make me or Brian or somebody kind of tell you no. And when we tell you no, be like, okay, cool. when's the next time I can do this again? And then just do that, right? Just and by the way, this is also a funny test for founders because I feel like if somebody applies the iterative and doesn't get in and then just kind of gives up after that, I wonder what else they're going to give up in their startups. Like the best founders are just like, they just don't listen to no's very often. They're just like, all no's are temporary. I'm just going to keep trying the next time. So,
Awesome. Our next question is, I'm not in Southeast Asia. Should I move?
I mean, I can't make that choice for you. like, we get this question a lot. And here's the thing that I'll kind of say. I get a lot of people that want to be part of Iterative and they say, hey, I'm willing to move. I can't invest in you because you're willing to move. And then they're kind of like, should I move? And I'm like, I can't tell you whether you should move. That's like a life decision that you should make kind of like outside of me. Um, Investors are not that important, including us and other people. And so I just wouldn't make these decisions kind of like based on what investors kind of say or to get into some program. You should move to Southeast Asia if one, you really want to live in Southeast Asia, or two, you think your startup has the best chance of being successful in Southeast Asia. Those are the only two reasons you should kind of like move, right? And if you do move and you find out that that is kind of like it's a good move for you, then you should apply to Iterative, and then we're happy to kind of take a look. But we don't kind of apply on contingents and that kind of stuff because frankly, we just don't want people to make this decision based on kind of like our decision, right? You should make this decision for yourself and what's best for your startup, and then we can kind of see after that. We're not that important. Don't move for us.
Okay, next question. If there are existing competitors addressing the same problem, does it provide additional validation of the problem?
Yes, kind of. But then you have a different problem. Okay, so this is actually an interesting question. Okay, so if you let's say that you want to start a ride-hailing service. I mean, clearly the fact that Grab is billions of dollars business and Uber is a billions of dollar business is evidence that that's a real problem. Definitely. But now the problem ends up being how are you different? Right. And so for some markets where there are no existing competitors, the thing you're going to have to convince people of is that there should be people working on this space and this is a market that people are undervaluing and I should work on that. If you work in a very competitive space, the question is not, is there a problem here? The question ends up being, how are you different and how are you going to win given that there are so many people? And so you're kind of, yeah, trading what you need to talk about in different problems, if that makes sense for people.
That's pretty awesome. If you're aiming for 10%, is it still done through a safe note?
Yep, 100%. Yeah. We basically have some like Singapore modified version of kind of like YC's kind of like safe note. So it's like very similar terms. You're not going to find. Sorry, let me kind of be very clear on kind of terms here. It's going to be very similar to that. And I said this in the chat, but let me say it's worth saying it again. There's no program fees. It's not tranche investing. You get all of our money up front the moment that we kind of accept. There's no, I've heard some people that there's like interest rates, so you have to pay on, there's none of that. We have no board seats. You don't have to listen to us at all prior to that. We literally do the safe note. We give you our money. We get to work. There's no other hidden kind of like anything or anything like that. And so I know there's a bunch of wild terms that programs and investors are kind of offering out there around kind of like milestone investing and tranches and interest. No, full amount right up front. We get to work before the program starts. Oh, yeah, there's other programs that invest like halfway through the program. Like they want to kind of see how you do. No. Before the program, full amounts. We want to be invested so that all of our kind of like all our incentives are aligned, and then let's get to work. So yeah, I just want to be really clear. There's like no special secret things that we're like not talking about.
Okay. What gives you conviction that a company's differentiation will last, especially AI-based products built on
Ooh.
GPTs, where other companies could, in theory, replicate?
Yeah, I mean, okay, this. I mean, I feel like there's books written about this. Maybe I'll tackle the broader differentiation question first, and then maybe we can talk about kind of like AI kind of like stuff, right? Okay, there's two sets of things. Some differentiation, there's lots of different types of differentiation. So one type of differentiation is it's just really hard to do. So I have some friends from a YC batch that are working on a portable nuclear fusion reactor. So literally a nuclear fusion reactor that is on the back of a truck that you can drive around. Their differentiation is, can I swear on this? The differentiation is that's really fucking hard. Like, good luck trying to compete on building portable nuclear fusion reactors, right? And so their differentiation is just, it's really hard. Now, can they pull it off? We'll see. But that differentiation is, it's just hard. Other people can't do it. And they are like a bunch of PhD nuclear physicists. So it's just very few people can pull this off. So that's one type of differentiation. There's another type of differentiation that is temporary, but you can parlay that into a more, permanent position. Okay, for example, Google is actually not that differentiated. I can write a crawler that did what Google did when it first came out. Easy. It's called PageRank. They wrote a Stanford white paper on it. You can copy it, right? It's not that hard actually. Okay, yeah, is it hard to crawl the web? Yeah, okay, we can kind of solve this kind of stuff. But the trick is that they did it first. It was very differentiated when they did that. And then once they got that level of differentiation, they parlayed that into a more lasting position so that you could no longer kind of like beat them with that differentiation. So they were the first ones to do it. They were first ones to do it so well, so that if dummy Hsu Ken tries to copy it 5 years later, there's no point for anybody to use me because they already all use them. Right. And so it's not really that like I couldn't do what they did. I can do what they did. It just doesn't matter that I can do it anymore. Right. And so that's like a different kind of form of differentiation. So there are these like temporary kind of like spots. Like I don't know. For example, Samsung keeps trying to copy iPhones. It doesn't matter anymore. It was an iPhone, right? I mean, actually, Samsung does really very well on phones, and so maybe that's not a good thing. But there's different types of differentiation, and so sometimes some differentiation lasts because it's hard. Sometimes you parlay into other positions. AI-based stuff. To me, the primary differentiation for AI-based stuff is I'm not expecting any startups to build their own kind of like generalized models. That game is kind of like over, and you're going to need billions of dollars to do that. So that game is done. The two ways that I think the two ways that I think you can build some differentiation in kind of like AI based products is you just have some data that kind of like other people don't have. And so I could imagine somebody building kind of like an AI based product with medical records, and medical records are just not publicly available. And so OpenAI will never have them. And it's not that easy to kind of get. And so there's some level of kind of differentiation there. You're just kind of like making it harder. So there's that piece. I could imagine too that you work with a baseline model like OpenAI, but then you kind of tweak another kind of like you tweak on top of it for your specific case. And so maybe that's it. But look, guys, everything can in theory be replicated, right? So I think differentiation has never been about whether it can be replicated or not. I think it's kind of more nuanced than that. I think it's about there are openings in space there are openings in time where a piece of differentiation is more valuable and you need to take advantage of that place in time, and then you need to kind of like entrench yourself in that position once you get in such that it's very hard to defend against, or it's very hard to kind of take over, like Google has. The game for search engines is over, right? So Google got in there, they made themselves very entrenched, and then the game was over.
Just a time check. We've got about 10 minutes left. We still have a lot of questions, over 20, but if we don't get to your questions on this call, we'll try and reply them in the email that we sent after the event. So moving on to the next question. If we get accepted, would you provide warm introductions to investors for our future fundraising rounds?
Of course, we have an entire workflow that we track and manage that is specifically just companies. Okay, I think you guys can't do, I won't give out the email, but there's basically, we have an email specifically for this. And then we have a person on the team who manages these instructions to make sure it gets made. So we do make these warm instructions. We do a ton of them. We do them right after the batch. We do them for every batch kind of after that. And then what is sneaky is we have like 800 investors who come to our demo day, and so they have to sign up. They have to give you an email, so they will see you on demo day. But then I also have their emails, and so if you want warm introductions, I just go look at the list, and I'm like, okay, cool. Like even if I don't know them, I just send them an email on your behalf. And so this happens. We do this kind of like all the time. We have an entire process for it.
Okay. How should we think about A, getting initial revenues first before applying to Iterative versus B, applying to Iterative now?
I mean, the more evidence you have that you're working on something that people are going to want, obviously the higher your chances of kind of getting in, right? Now, I think the thing that is so I would do that. By the way, I also think that you want to gather evidence that what you're working on is something that people want also for yourself, not just for iterative, right? You want to convince yourself that you are working on something that has kind of like potential. Um, I sometimes feel like founders are like trying to get evidence that this is something people want for investors, but really they should be getting it for themselves first. And so I think in all cases, you want to kind of like try to get this evidence if you can. Um, and so I think that's always kind of like better. What ends up happening is if you are working on something and you don't have any evidence, you need to be very convincing that what you're working on is something that kind of people want, because you don't have any evidence, and so you have to just be very convincing, or you have to get lucky and you have to be working in a space that I kind of already believe is like a thing. So sometimes you might get lucky that way, but I think the best case scenario is like just is getting evidence. If you're working on a space that I really don't think people want, then I think you're going to need some evidence because I think you're going to have to kind of convince me that this is something that kind of like people want. And by the way, just because I'm not convinced that this is something people want, it does not mean that people don't want that thing. I'm not some like master guru who like knows everything. I get stuff wrong all the time. So um, I sometimes feel like founders talk to investors and they assume investors are right. God, they are wrong all the time, including me. And so, if you want to get our investment, you need to kind of convince Brian or I. But like, just because we don't think this is something people want doesn't mean it is actually something that people want. We're wrong all the time, guys. So don't listen to
Okay.
us too much.
Next question. Are you biased towards tech industries?
Yeah, of course. Sorry. My answer was kind of yes, kind of in first part, because I think of ourselves as we only invest in tech companies. And what I mean by tech companies is people who kind of employ some sort of kind of like software, hardware, some kind of like new kind of innovation to their business. I don't care about the specific industry. So, for example, I mean, he's not going to be here anyway. I won't say who he is. My latest investment is going to be in a company that sells eggs. I mean, if he accepts, he sells eggs, guys. That's literally all he does. He doesn't sell anything else. He just sells eggs. I'm very excited, right? That's not a tech industry, but he is using technology to kind of like modernize that industry, and I love it. So we don't only invest in kind of tech industries, but we do only invest in tech companies, which I think is kind of like a nuance. But if you are working in an industry that is like super old school and not sexy, and you're using tech, oh my God, please apply. Those are like our favorite companies to work with.
Okay. Next question. Let's look at how many more spots do you have for this batch?
Infinite, and I guess what I mean by infinite is um, I want to invest in as many good companies as we can come across. And so we don't have a set number. I want to invest in as many of those. We are only bound by good companies and money, and we have a lot of the money part. So like I would love to give it to good companies. And so there's no kind of like thing here. Um, yeah, nobody gets rejected because we have too many good companies. Never happens.
Okay. Next one. Can you go deeper into what makes a good problem statement?
Okay. I think okay, let me tackle this kind of like in two separate kind of things. Um, the first part about Judy covered kind of like how we think about problems, and maybe I'll kind of rehash that kind of like very quickly. To me, I care more about the problem than I care about the market because to me, the market is determined by the problem, and the markets that are largest are the problems that impact the most amount of people and are very painful for each of those individual people, and so. I'm looking for problems like that. Okay, to communicate your problem, what I would suggest is just explain it as simple as possible and from the user perspective. The thing that I hate the most, and I'm sorry to all my consultant friends on the call from BCG and all that kind of stuff, if you explain your problem by quoting some BCG McKinsey report bullshit, I'm going to stop you right there. I don't care. I don't care about reports. I don't care about those kind of research things. I don't care. What I want to understand is who has this problem? Why do they have the problem? And what is the problem? That's it. That's all I want to know, right? Um, no need, no jargon. I don't need any reports. That's just what I want to know. And then we can have a good conversation about how many of those people we think there are out in the world. And we can have a conversation about how painful it is for those people. And then that's it. That's all I want to know.
Okay,
Don't quote reports. They're useless.
we have 3 minutes more, 2 minutes more. Let's go into our last question. I think we're okay to go
Yeah,
a
we
little
can go a
bit
little
over.
bit over too, Judy.
A
I'm
little
okay.
bit over.
Yeah.
Great. So how would you suggest we strike a balance between qualitative validation and measurable validation at the very
Ah.
early stage of a startup?
Ooh, such a good question. Okay, there's here's how I kind of think about kind of like qualitative and quantitative. Okay. So if you just give me quantitative validation, then I think that you don't understand the why behind it. So if like for example, if somebody was like uh 10 people came to this ice cream shop, I'd be like, "Cool. You don't know anything about why they came to the ice cream shop." And that's really important to kind of understand, right? And so if you can give me the quantitative, but you can also give me the qualitative behind kind of what you're seeing, it's really kind of like powerful. And so I guess maybe here's like a better example of this. Let's say that you see 10 people that come to your ice cream shop at 12 o'clock every day. I'd be like, cool. I don't know what to do with that. I don't know what to make of that or whatever. Now, if you say, hey, I see 10 people that come to my ice cream shop every day at 12. So I went and started talking to them. I'm like, why do you guys come in all the time? And they're like, oh, well, we work around the block and we like really kind of like this kind of ice cream and we always get affogatos because we're trying to have some caffeine, but we kind of have the sweet tooth. Okay, that's really important because then you can be like, okay, if that's a thing, I'm just going to go do a promo and I'm going to go try to find all the people that work around here that really love affogatos at 12 o'clock and I'm going to offer an affogato promo at 12 o'clock. Okay, now you're like talking. Now maybe you can get that to be 20 people, and now you can get that to be 30 people, and now you're kind of like moving, right? Um, and so to me, I think about it as if you have qualitative stuff, then if you have quantitative stuff but can't explain the quantitative, then it's only mildly kind of valuable. If you have qualitative stuff like people love affogato at noon and you don't have any quantitative, I don't know if it's true or not. I'm like, I guess if you say so, right? And so I think being able to show both is like really kind of powerful and maybe kind of do it in that way. The quantitative tends to be kind of evidence, kind of empirical evidence, and then the qualitative is the explanation for kind of why you are observing what you were kind of like observing. Um, if this sounds like science, it basically is science. If you're doing physics and you just have the data, that doesn't tell you a lot. You need the theory to kind of explain what the data is kind of seeing. It's very powerful when you have both. It's very weak when you only have one.
Great. That's a great answer to a really good question. We're on the dot at 7. Shall we answer one more and then
Yeah, we can do a couple more. We can just, we can see how fast we can go.
Okay, awesome. So next question. Do you have anyone on the team who has deep expertise in AI?
So many. Brian and I's first company was a machine learning company in 2008, and we both studied I studied math and computer science in school. Brian did computer science and electrical engineering. So we've been in AI before people knew about kind of AI. And then even further than that, my brother was co-founder of my first company, and he worked at an AI research institute for 9 years, and so we can call on him, and blah blah blah. We have lots of friends. So yes, this is an easy one.
Okay, great. We've got just a few more questions left.
Yeah.
The rest I think we'll move to email. So I think it will take 4 or 5 more and then we'll call it a wrap. So the next one, how do you differentiate solving obvious problems and uncovering latent unmet needs or demands that could drive a product's unique value proposition?
I don't know if I totally kind of understand the question, but let me try to kind of like piece. How do you differentiate solving obvious problems and uncovering? Oh, okay. So if this is your question and I don't answer it, put it in the chat. But let me try to rephrase and answer the question that I think it is. Okay, so there are some problems that are really obvious, and there are some problems that are not obvious, right? And I think what's interesting to kind of like think about here is. For the very obvious problems, if they haven't been solved yet, I get very skeptical because I'm like, if this is an obvious problem that hasn't been solved, why hasn't it been solved? Like, almost by definition, if it's obvious, lots of people have thought about it, and so it should be solved. Um, the thing you want to think about, and I wrote this years ago, and maybe I never ended up posting it, but the way you want to think about it is, if you want to do the 2 by 2, one is how obvious a problem is and how not obvious the problem is. And then the other 2x2 is how hard it is to solve. And basically all the obvious easy problems are done. Like the internet came out and basically all obvious easy problems got immediately kind of solved. I mean, think about eBay. It's like so obvious and so easy to build, immediately got done within the first like 3 years of kind of like the internet. And Pierre made like $1 billion and is like living in Hawaii now. Done. Right? Okay. So the only remaining quadrants that exist are obvious hard problems, which I call the Elon Musk quadrant, even though I won't get into all his political kind of weird stuff kind of going on now. But he took all the obvious hard problems, which are hard science problems that are like obvious. He's like, we should build an electric car. Okay, everybody knows this. It's really hard. He figured it out. We should build rockets that go to space. He figured so obvious hard problems. And then the other quadrant that people are digging into is not easy, not obvious problems. And to this one, it's hard to tell whether it's like been mined out or not mined out because by definition, the problems are not obvious. And so I think if you're working on non-obvious problems, then you're going to spend most of your time trying to figure out if it actually is a problem. And if you're working on obvious problems, the question you're going to keep asking yourself is, why hasn't this been solved yet? And you're going to want a reasonable kind of like answer to that. And if you feel like it's if you're working on an obvious problem that has been solved, but you think you have a better way of solving it, then you need to spend a lot of time talking about why your way is an order of magnitude better. If it's only marginally better, nobody will use it. Like even if I make a marginally better Google, everybody will still use Google, guys, right? Like in order for me to unseat Google, I have to make something that's like 10x better than Google. It can't be like 10% better. People just use Google, right? There's too much inertia. And so maybe I would think about it that way, if that helps answer whoever's question this was.
Next question. Are there any particular sectors you're keen on receiving more applications from in this batch?
Old school industries that nobody cares about. That's what I care about. I think this is also really specific to Southeast Asia. I think Southeast Asia, we're still kind of a region that's kind of developing. And there's a lot of old school businesses. And they are great businesses. And I don't think they've modernized as quickly as kind of like other places. And so I just give me all of them. So if you're working on modernizing some industry that like I've never heard of and never thought about, like eggs, like please apply. I just love all of that kind of stuff. And I just think that's great for Southeast Asia. Yeah. So old industries that I've never thought anything about would be great. I just want more of those, please. I mean, I guess if you're working on sexy fintech AI stuff, you should apply to, but like we get a lot of those. And so I think if you're asking me particular sectors I want to receive more about, really boring businesses that are like really valuable that need to be modernized. That's the stuff I want more of.
Okay, 2 more questions. How much validation is enough and how long should we do it?
Super good question. I get this quite a lot. Hard to say. And I would love to be able to give you guys a specific answer where it's like, oh, if you reach 10,000 in revenue, then I automatically will invest. There's no number. There's no magic number. We don't have anything internally. I'm not trying to like hold anything back. Maybe let me kind of talk a little bit about how we think about validation. And this will give people kind of a better sense of it. Validation to me is evidence. And so if you're working on a really important problem, then there should probably be evidence that this problem is important. Now, sometimes whether a problem is important or not is up for debate, right? So Judy might think a problem is really important. I might not think it's very important, right? And this happens. Judy could be right. I could be right. Who knows? Okay. So I think the way that you want to think about it is you don't need as much validation if I already think it's a problem. So if Judy thinks something is a problem and I think it's a problem, Judy is not going to need that much validation. I'm kind of convinced already. And so you kind of don't need as much. If Judy thinks it's a problem and I don't think it's a problem, I'm going to ask Judy to kind of like show me some evidence that it's a problem. And so you're going to need to do a little bit more validation. And so I think this is the case for most investors. So oftentimes, okay, I'll give you guys a hack for investors, even though it has nothing to do with us. The hack to kind of raising money sometimes is like, it's not spending more time trying to convince people who don't think this is a problem. It's actually just spending more energy finding people who already think it's a problem. And just spending more time on that you end up kind of getting better returns. It's kind of like if fundraising is basically sales, guys. And the thing you learn about sales is like, spend more energy finding people who already want your product than trying to kind of convince people who don't want your product. And so I think about it that way. But if you are working on something and there's very few people who think this is a problem, you're going to need more evidence to kind of convince people. And that's just kind of how it is.
Okay. Our last question for today. How do you access the potential of a platform designed to address unmet user needs that they may not explicitly articulate?
Oh, okay. Yeah. Okay. So let me take this as a kind of like a good example. Let's take Notion, right? Everybody's kind of familiar with Notion. You write Word documents. We use Notion internally, Iterative. Okay. What is Notion's unmet need? I have no idea. Couldn't tell you. There was Google Word before, there's Microsoft Word before that. I'm sure there was something before Microsoft Word. There's been document processing forever. Decades and decades and decades. All right? Okay. So how do you kind of like articulate this? I think the thing that you're going to end up kind of needing to do is you're going to end up telling some story about kind of like, oh, but it's better designed and people like caricature pictures of people and all this kind of stuff. And no one's going to believe you. You're going to need the growth chart. Like, and maybe this is a good way to kind of end this off. I'll tell the story of that I heard about Twitter pitching. Like, what's the unmet need of Twitter? Like, for the love of God, did we need more social media kind of like stuff then? Okay, so here's the story. So Twitter is trying to raise money, and they're meeting with this guy named Ron Conway. You can look him up. Ron Conway is like he's known as the godfather of angel investing in Silicon Valley, and he's this older kind of like white guy. And Jack Dorsey, Evan Williams, Bizstone are pitching him for kind of investments. And they're like, okay, guys, so here's the thing. Twitter, 140 characters. You write status updates. You text them. And as Ron Conway tells the story, he's like, why am I interested in this? There's Facebook already exists. You can write as many characters as you want. Why do people want 140? And why do they want to do this through text? And why do they want to do this? He just doesn't get it. And he's like, what are people using it for? And they like pull up some screenshot and it's basically a bunch of people talking about what they ate for lunch. And he's like, I definitely don't get this. Like, who cares about what people ate for lunch? And so as he's hearing the pitch, he's being polite. And in his head, he's just thinking about like, I just want to get out of this as quickly as I can. I don't get it. I don't get the unmet need. I don't get the problem this solves. I don't get any of this stuff. Okay. Somewhere during the pitch, they show the growth, their metrics, and it's just number of tweets and number of users, and it's just up and to the right, like exponential. And as he recounts the stories, what he says is he stops the presentation there and he's just like, oh, guys, you should have just led with this. He's like, all right, I'm in. And they're like, oh, what do you mean? And he was like, I have no idea what's happening. I don't understand the unmet need. I don't understand the problem you're seeing, but something's happening. Like clearly this is resonating with people in some way because you have this kind of growth. And so I'm in just based solely on that. You guys need to go figure out what's actually happening and what's going on and all that kind of stuff, but I'm in. And so I think for kind of TikTok, Notion, TripAdvisor is a little bit easier. TripAdvisor is like people travel and they want to like understand, get reviews about places before they go. That one's easy to kind of like answer. But TikTok, Notion, all this kind of stuff, if you try to explain the unmet need, it's going to be very fluffy. You're going to need the like growth chart that goes up and to the right. And that makes it kind of seem like, oh, maybe you're right about the fluffy stuff you said, right? But Notion, I think, was like that. If you guys look up Notion's story, they actually been around for like, before everybody heard about them, they'd been around for like 4 or 5 years. And so they've just been quietly kind of plugging away for 4 or 5 years. And nobody wanted to invest in the company because they were like, I'm going to make better document processing. And everybody was like, why would you do that? Like, document processing is fine. And so then they, grew a lot. So hopefully that's kind of like helpful for people, but you want to kind of think about it that way.
Awesome. I would live and die by the toggle function actually on Notion now.
Oh,
Love it.
really?
Yeah, I love it.
But see, but maybe this is a really good example. Judy loves the toggle function. There is no way you can make an investor pitch around, you know what's really great about my product? We have a toggle function, right? Like, no, right? Nobody thinks. But Judy loves the toggle function. June probably loves some other part about Notion. I love some other piece of it. And for whatever reason, it has enough in its experience to kind of make people enjoy using it for all these kind of different reasons. And it's very hard to pinpoint, but at the end of the day, they have a chart that goes up and to the right. And so people want to use them. And so that's their pitch basically, right? TripAdvisor is easy. It's like, you want to go, you want to get reviews. You can make that pitch, but TikTok, Notion, tougher.
Oh, awesome. So we've come to the end of the event. Thanks, Ken, for sharing all your insights, and thanks everyone for your really awesome questions. So we hope you found it insightful. please apply by Monday, 20th midnight. That's the deadline. If you use our unique link, we'll fast track you. And also look out for the event recap video, which we'll send out. Any questions that we didn't get to tonight, we'll answer them in the email. And yeah, that's it. Thank you so much for joining us. And,
Maybe
good
one
night.
thing. One thing I'll kind of add, sorry, Judy, Judy's trying to get us out of here. I just put my email in the chat. If you guys have any questions about kind of the application process or anything like that, you can just email me directly. That's like, that, I mean, you can ask Judy and June. That's my real email address. That's not like some kind of like whatever. That's like the one that they use. So feel free to email me. I'm happy to kind of answer questions over email and that kind of stuff. And so, yeah, we would love to see kind of like everybody apply. Don't reject yourself. Please, if you're interested at all, you should just apply. That's kind of the best way to go. Sorry, Judy. I wanted to put my email
No
out.
worries. Yeah, I think that's it. That's all there is for tonight. Thanks, everyone. Good night.
Thank you. See you guys.
See you.